Hello, I'm Mark Starosciak, Managing Partner of Infinium Investment Advisors. This is our market update for the week of February 21st, 2012. It was President's Day there on Monday, and we all enjoyed, hopefully, a restful day off. Before we begin, of course, any information we talk about here on the video is purely for informational purposes only. It's not a recommendation to buy or sell any security or follow any investment strategy. We do not provide tax or legal advice, and always consult your own financial advisor or investment professional before making any investment decisions. So jumping right in, we've got a few topics to cover today. One is looking at just how difficult it's been to beat the market if you are an active money manager. Then we want to look at why that is, and we would point to one stock in particular that's had an undue influence over the broader market overall. And then finally, our consideration to you is, what does your money need to do for you and when? So again, jumping right in, active managers generally in 2011 underperformed their benchmarks. And what does this mean? Well, an active manager is actively trying to pick various investments that will beat a passively managed basket of securities. So for example, we use the S&P 500 as a benchmark for what the average stock is doing here in the US, and that's very widely quoted. Some people use the Dow Jones Industrial Average, but that is truly only 30 stocks, whereas the S&P 500 is 500 stocks. So you're getting a much broader, a better look at what the average stock is doing. And so why would you hire an active manager? Well, that's simply to weed out those stocks that would potentially underperform and have more of the good stocks, the ones that outperform. This is certainly a challenge. And as we can see by the numbers, in 2011, there was indeed only about a quarter of active money managers that beat their benchmark. In this case, we're considering that S&P 500 index. So it's been rather difficult, and the question is why? Well, Apple stock truly has been a great influence on the markets overall. And of course, it's been on such a monster run. If you've owned Apple, it's been terrific. So indeed, the S&P 500 tech sector is up nearly 10% from that October high in 2007. But the sector would be down 4.5% if you took Apple out. And some would argue, well, you can't take Apple out. It's too big. It is doing what it's doing, and therefore you have to measure it. But in many respects, this helps us to understand just how influential the Apple has been as a stock on the tech sector overall. From a broader perspective, it's about a 2-point difference from the October 7 levels. The market would be down 15% if you didn't include Apple. It's only down 13%. And then on a near-term basis so far this year in 2012, the market's up over 8%, only 7.7% if you took Apple out. So truly, there's a few dynamics here. One, if you were to look at investment managers that have outperformed, more than likely they have an overweight in Apple. And on the flip side, if they haven't had Apple in their portfolio altogether, odds are that they have outperformed and maybe significantly underperformed. So our consideration to you is, what do you need your money to do for you and when? And so all this comparing to benchmarks and the raw data is great, especially when the market's moving up. But what does that mean for you and your personal situation? What if the markets go up 10%, but you need your money to do a 12% return? Or what if the markets go up 10 and you're only up 8, but your money only needs to do 6? Is that a good year or a bad year? So the bottom line is here, we see many investors that just don't know what their money needs to do for them and by what period of time. So again, we tie this back to financial planning all the time, and that is, if you don't know the answer to these questions, you need to crunch the numbers. Find yourself a financial planner that you trust, that you know, that can put this information together for you. Certainly here at Infinium, we do this all the time for clients, and have for more than a decade. So again, we highly encourage you to figure out, what does your money need to do for you and when. And if you do this, you'll have a much better picture of, are your portfolio managers doing the job that they need to do for you. Thanks again for tuning in. This is Mark Starosciak with Infinium Investment Advisors.